So the first thing I want to look at is really news. So let's go there and see what's happening today, if I can actually find the dash thing. Okay, here we go. So the Forex Factory calendar is looking a lot like this, stating that at 8:15 a.m., which is, of course, in around about 43 minutes from now, we're going to have some low impact news, and that's going to continue pretty much for the first 45 minutes. All this low impact news coming along together, and then it's a bit of a rest period, to be fair, on the news scene. But then it comes in, if you're particularly interested in trading the CAD, that is, with a vengeance, with the monetary policy report, which of course is part of the three-pronged event, the rate statement from the Bank of Canada, and of course the interest rate, which is predicted to rise on the CAD. That would, I think, be the second rise this year for the Canadian dollar. And of course, an hour and 15 minutes after that, the press conference takes place. So the CAD's likely to move around a little bit in the later afternoon in London, of course, that is. So if you're trading at that time, you might want to have a little bit of a think about your positions. I'm going to be talking a little bit about this in the not too distant future, the Bank of Canada rate statement, which, as I say, is predicted to rise by 0.25%. And then tomorrow we've got the same thing, not in terms of a rate rise, but we've got the interest rate announcement on the euro, not expected to do anything, the press conference, of course, and a little bit of news out of the States. But today, it's all about the CAD, with the euro perhaps a little bit choppy and changey. We shall see. First chart I'm going to look at today is Euro CAD. And looking at the daily chart, the reason I'm doing that is yesterday I placed an order long above this bar here. Naturally enough, that hasn't triggered, with a less than enthusiastic lot of buyers there yesterday, and so far today that is the case as well. I actually cancel that order, or it's naturally expired, because I don't keep them in order more than the duration of the day. So that order is now gone. But I'm not convinced in any way, shape, or form by what this market's doing. As I said, we're predicting to have an interest rate rise. And my logical thought process then becomes, all right, if we're going to have an interest rate rise, then why aren't we seeing the CAD appreciate? Well, I guess in some degree we are, since we technically bounced off the monthly pivot for the fifth time in, a week or so, a little bit more than a week. But really, we haven't got into this candle we're starting to, I suppose, but you would have thought that would have been eradicated if the market was actually thinking Canadian interest rate rise. So it's a little bit weird, and I'm struggling with the concept, frankly, that we're actually going to have an interest rate rise, yet the CAD isn't appreciating at the rate you might think. That could well come, of course, during this session and well before that rate rise is forecast to take place. So it's tough for me to be thinking long anything against the CAD at this point in time, and I guess that's the reason I'm here on this chart at the moment. Despite the fact that we've got a big bullish engulfing bar, we've got a higher low, and that was the basis of the trade that I took, really. It's going to be painful if this CAD actually doesn't raise interest rates, or if the Bank of Canada doesn't raise interest rates, because if they don't, I got I'm fairly sure that this cross will absolutely explode to the upside. Whether that's worth taking a risk on entering the market at the moment and crossing your fingers is obviously a debatable point, and I'm not interested in doing that. So I'm going to stay out of this for now, but I will be watching for signs, not in this session. I'll be watching for signs when that interest rate announcement is made that EuroCAD isn't going south. And if it isn't, then I'm going to try and find a way into the northern variety or the buyers. That's where I'll be focused, but only after the interest rate announcement, because to me, I would have thought the EuroCAD would be down here by now, but it isn't. And for me, there's something that's not entirely logical in that process, given there's an interest rate rise almost certain later on today. So let's get rid of the CAD until that interest rate rise and talk about this one, Euro US dollar. I actually have an order on this one as well, not on the daily chart, but on the 4-hour chart. Let's go through that first, I suppose, and then I'll come back and explain my thought process. We're trading above this candle here. You'll probably recognize that situation as very, very similar to what we were looking at on the CAD on the daily chart yesterday. It's a very, very similar scenario. It's a little less dangerous than the other one, than the EuroCAD trade, in my humble opinion. I was really playing double bottom here and slightly higher low, and then a bounce off the daily pivot, thinking that if price doesn't sink here and take out this low, then there's probably some bulls around the place who want to take this up to maybe even the weekly pivot, maybe even to the top of this range. So that's my thought process there. So I'm going to give this a chance to go north or to go long, if you like, whichever way you like to call it. And it's playing a bit of a false break, really, of this support trend line that we have here. We had a break of it. We've had some consolidation. We've got back above it. We've retested it. So I actually like that as a scenario. So the entry, if you want to follow this trade, is long at 1.1490. Stop loss is 29 pips, so effectively 1.1461. The way I'm going to manage this is I'm going to take profit at 20 pips, which is this level here. And at that time, I'm going to close half the position. So 20 pips after entry, I'll close half the position. And I will move my stops. Where have I got my stops at that point? At 20 pips, okay. So I will move my stops when I've taken that first profit, 20 pips from entry, making that a fail-proof trade. It can only win from that point. So that's where a take profit one is at 20 pips, just underneath the weekly pivot. I've got TP2 probably in a little bit of an ambitious place here. I might need to sneak that down a few pips. In fact, I'll do that now. I'll make that TP2 110 pips. And what I'll do at 110 pips, there you go, that's a better place under these highs. What I'll do at 110 pips is simply trail the stops and take 25% of the remainder off. So 3/4 will be off at that point, and we'll trail with 1/4 of our risk to the end of to duration until our trailing stop gets hit. So once again, entry is at 1.1490, stop loss of 29 pips. TP1 is at 20 pips, where I'll close half, move stops to 20 pips below entry, and TP2 is at 110, where I'll close 25% of the trade and trail the stops from there. So that's euro dollar. Why am I thinking that way, I guess, is now what's the burning question. Well, similar to euro CAD, we do have a pronounced double bottom here on the 4-hour chart, and then we have a higher low. So that's giving me the indication that unless the sellers come in here and take out this low, the market is probably going to buy. And if the market does that, then there's some obvious scale out or targets here, one of them being the weekly pivot. I want to get out well before that. And the other one being these highs. I'd like to scale out before those as well. And that's exactly why you see the two take profit areas there. If at that point the market turns around and takes our trailing stop, or so be it, we've done well out of the trade. If it, however, goes on with the job and maybe seeks out newer highs, look, this is unlikely to be fair, and that's why I'm only leaving a quarter of the trade in the market. I would imagine if euro dollar hits here, it'll want to bounce back off it, but we're a long way from there at this point, so not a whole lot of point talking about that. So that's euro dollar. If we are to trade it in this session, if I have a look at the 30-minute chart, which is entirely possible, you can see what's happening. We're getting a backup, if you like, of consolidation. Not unusual when you consider that we do have an interest rate announcement and an ECB press conference tomorrow. So don't know that I'm expecting too much in terms of breakout here in this session, but one never knows, and one needs to prepare for that. So if I am to trade here, obviously my bias is long, given what I've just discussed on the 4-hour chart. Yeah, a bit tough to trade long at this point, is it not? Into that confluence area of daily pivot and support trade line or trend line. So what I'd probably like to see here, if I am to think long, is price to get above here, maybe even above the highs of the day, and then come back and test the confluence area. That would be a reasonable place to go long then at that point. If I'm entertaining a short, am I entertaining a short? Oh, look, all things are possible. And as I said before, if the rejection of the weekly pivot means anything, and this low gets taken out, then most definitely we'll be testing this low, in my humble opinion. So there's absolutely no reason for price not to fall here, none at all. If I can find something that looks even remotely like a bearish signal here, it's just eluding me at the moment. So let's go back to the 30-minute chart, which does look potentially like a break of this trend line or trade line, whatever you want to call it, and a retest of that. That, in my book, is a potential trade. But is it tradable is the question. I don't like that we're trading into the low of the day, which is very, very close to, in fact, it's an equal low here, if you like. You can see this area here, that low equals that low, been consolidation in the past. I don't think I want to be trading short here. So that's my issue. Trading at the low of the day into support is not a great plan for me, so I won't be doing that. Rather, I'm prepared to wait until we get back above the daily pivot and that confluence area. If we do go short here and take out these lows, that would be obviously a very bearish signal, and it'd be tough for me to find any common ground there. Then we'll cross that bridge when it comes. But I don't see that as being in my game plan, that's for sure. In the TTR morning session this morning, I was talking about that trade, of course, but also this one, which is the Aussie. Now, this is not dissimilar in any way to the two that I've already mentioned, Euro CAD and Euro dollar. You can see here that we've got a double bottom in place. Market's obviously trending very strongly to the downside. There's no question there. So it's if you would be thinking long here, it's definitely counter trend. But my rules of counter trend are to see a reversal pattern to start with. Well, I think you've got that in spades. You've got a bullish engulfing bar there. You've got a double bottom. You've got another bullish engulfing bar there. You've had a little rollover. You've come back and put in a higher low, higher than these lows. So that particular candle, in my humble opinion, was indeed tradable. I chose the euro dollar over the Aussie. Why is the good question now, since we've had plenty of bullish price action on the Aussie. I think this daily pivot being below us here and untested was probably the straw that broke the camel's back for me. I find it very difficult to trade away from an untested daily pivot. You can see it was untested yesterday. That's a fact. But it doesn't like to remain lonely for too long. And for that reason, I just didn't want to trade away from it. If it comes back here without killing this candle, killing this daily candle, which is a very obvious reversal bar, if it comes back and tests the daily pivot without taking this low out, I may still get interested in this long, in the Aussie US dollar long. And I think I spoke about this maybe all day yesterday. I can't quite recall. There was so much going on in terms of bad internet connections and people trying to talk to me and me trying to talk to other people. I just don't know if I actually spoke about this. But the Aussie is loosely correlated to gold as well. And I demonstrated that in last night's program on the webinar. I'll bring that up. Let me just do that again. It's a worthwhile exercise if you've never had a look at it. If we have a look at gold there, what chart's that? That's the hourly. We'll go on the weekly chart for both of them. And we'll go a bit tighter on this one. There we go. That gives you a good idea of these two pairs. You've got the Aussie on the top on the weekly chart. You've got gold on the bottom on the weekly chart. So if you can see the correlation here and how the Aussie actually tracks gold, you can see it's pretty clear through here. And then the big fall all year from the Aussie. Not as bad on gold, and gold seems to have turned around and is, I won't say on fire, but it's certainly rallying. There's no question about that. So on that basis, I don't think the Aussie may be too far behind it. And fundamentally, I can't think of one good reason why the Aussie should be rallying. We've now got just about the lowest interest rates. When I say we, I'm an Aussie. The Aussies just got the lowest interest rates around. Everyone else is raising their interest rates. The Aussie central bank is not saying they're going to raise interest rates until maybe next year, maybe 2020 even. The economy is ticking along okay. That's not too bad. There's talk of housing bubbles. There's talk of house prices tumbling in the major cities. So fundamentally, there's really no reason for me to be thinking long Aussie US dollar. But when I have a look at this chart, it's very difficult not to see a correlation here. And if gold does go and continues to rally up here, I've got a feeling that that the Aussie may follow suit. It may not just go at exactly the same time, which is a good for us, because if we notice it going and we notice it's gone, we'll probably have time to trade the Aussie. And again, that's why I'm just not ready yet, I don't believe, to go long the Aussie. I want to see a little bit more of gold rate rising before I actually take that correlation into consideration and look to trade the Aussie long. So I hope that helps. And we'll look back to the Aussie again. There we go. So can we on the smaller time frames take that into consideration and give ourselves an opportunity to trade? Well, yes, the answer is absolutely yes, we can. But I'd like to see gold continue. I do see this as a very clear potential long, but I couldn't trap it here. I could have trapped it on the daily candle had I so chosen, but as I said, I chose the euro US dollar over the Aussie. So what am I expecting? I'm expecting this daily pivot test. And if this daily pivot test takes place, that may be the time that I start to invest in Aussie US dollar long. but I don't think before that. Potentially we could go to the weekly pivot here, find resistance and bounce off it. All things are possible, there's no question. I'm not ruling anything out, but what I'd like to see, and I feel would be a tradable commodity, would be if the Aussie comes to the daily pivot and then gives us an opportunity to get into this trade. So on the smaller time frames, it may even be possible to trade that. So trade down to the daily pivot. At the moment, do I see that as a possibility? Look, there are a couple of ways I could play that. I could put in a resistance trend line here. That should give me a good indicator, actually, as to what the market has in its mind here. Should we come back and test that level, and I'll put another line in there, you can see, I'll just make that a little thicker and make it red perhaps so you can see it clearly. Right, so we can see, it's actually pink, but that's fine. We can see that level is not only the backside of a resistance trend line, it's also got very good form as support and resistance through here. So it's a good confluence area. So I definitely like price to hit that line. And if it does hit that line and give me a reversal bar, then it's probably tradable. If, however, price breaks back below that level and then retests the backside or the underside of that trend line, that's going to give me a short signal. So there's two ways I'm looking at this. One, as a bounce off that confluence area, which is not my preference. And the reason it's not my preference, again, it's this untested daily pivot. I want to see that tested. And if I can trade it, happy days. There's another line that comes into a confluence area here as well. And that's it there. So if we're looking at price in time, which is an interesting concept, of course, that we won't speak about right now, but let's just consider that price gets to this area at the same time as we hit maybe, I don't know, midstream in here somewhere. It's going to create a very interesting confluence area of resistance trend line, support trend line, and horizontal level. So I think this is a really, really good place to trade. The reason I say that is because once you do hit resistance or support, you find that it will bounce or break and go a fair distance. The only caveat I would put on that is that we do have the European Central Bank meeting tomorrow, interest rate announcement, press conference. The market will tend to back up, not so much on the Aussie, but certainly on the euro, but the market tends to just go into a little bit of a pause when these major announcements are happening. Maybe not today, but maybe tomorrow. So Aussie, we're looking at this area here, and we're looking for market to give us a signal. If it's a bounce signal here, I might trade it, but it'll be very small risk because of the untested daily pivot. If we come under this,
hey Jeff.
Hey, who I got? Sash.
Can you hear me, mate?
Yeah, I can hear you. Can you hear me? Hello, hello. Don't tell me this is going to happen again. I'll scream. Just hang on 2 seconds, guys. Okay, just sent Ash a message, so we'll hopefully he can get in and hear us. That would be good. Righto, what do we got? We're going to move on from the Aussie because you know what I'm going to do there, or my thought process. Now going to move on to cable. Now, cable's very interesting as well. You know, it's very difficult to get a definitive directional bias here today at this stage anyway. Yesterday I said, pardon me, that this line here was very, very important, and if broken like that, as it was a very, very bearish signal. And I still think that's the case. But I also said it's virtually untradeable at this point. Reason, because I didn't want to trade into this level here, which was not only a swing, but it was also the monthly pivot last month. That, believe it or not, is a very, very important thing. When I say thing, it's an important level, if you like, of support and resistance, as always. Monthly pivot is very, very strong level for obvious reasons. Hang on 2 secs, guys. I'll just, so I can't answer that. There we go. So it's a very important level. And to ignore it, even when it's last month, is done at your own peril, in my humble opinion. So what we had here, we had this decisive and definitive break. It couldn't be any more stronger statement than breaking both the monthly pivot, current monthly pivot, and that support trend line. Very, very strong. So it's a very bearish signal. But to then just jump in the market and trade into this support area where it's also been resistance is just suicide. So that's why we didn't do anything about that yesterday. I'm still looking for an opportunity to get back into this short that we took here only last Thursday, I think it was. And if you're still in that trade, happy days. I don't think you've got a real issue at this point. We've just got to get through this level, and I think we'll be away with the Pixies, or away off to the races, or whatever you want to say. So how do we deal with this today? Well, again, we've got another bearish bar. Not entirely bearish because it is a green candle, but we've still got this support area underneath us, which is very, very difficult to trade into. I've got a feeling we'll test that level today, not necessarily break it. So I'm willing to trade to it on a smaller time frame, but I don't want to take any undue risk here because I think it's probably going to survive as support maybe for a second time. Let's get rid of that trend line now and put it on a 4-hour chart, perhaps. There we go. So what we've got, if we're looking to trade this at all on a 30-minute chart, we need something to trade off. Yes, we've got the daily pivot sitting there. We've also got an interesting line coming through here, which is very interesting, particularly at this point. I've also got one coming through here, which again is giving us a very strong confluence area where the daily pivot meets support and resistance trend lines. So how do we handle this? Can I trade this long? Can I trade it short? Are all those questions. Well, the overall picture once again is very, very bearish, right? But we do have support here. So you need to take that into consideration, and I am taking that into consideration. So I'm willing to trade short down to that level. So we've got plenty of room to do that before this area if we were to enter the market now. But the problem is I don't have anything to tell me to enter the market now. I don't have a nice candle. I don't have what I'm looking for. So I need price to get back into this area before I can trade. And I'd love to do that because it is a very, very strong confluence area. So what do I see happening? I've got a shot over the bow here, in my humble opinion. That shot over the bow is the break and retest of the daily pivot at a resistance area. I'd love to trade that, but it's just a little bit too small a candle. That's taking a big risk on a 5-pip candle. Not for me, because I'm going against my bias, don't forget. And I need a setup that's pretty much ironclad to go against my bias at most times. What I can say, if I get another signal like that, maybe a break, take out the high and then come back and retest the confluence area, then I may be prepared to go long. But I wouldn't trade beyond the monthly pivot, that's for sure. So that would be my obvious target. Okay. Not my bias. My bias is still short, but guess what that would do? if price were to go there, that would give me an excellent selling opportunity. And I've probably even got a couple of lines that could help me there. There's one. So that gives me a nice confluence area of resistance. That will actually do monthly pivot. We've also got that level, of course, coming through here, which is the high of the spike of yesterday. Whatever caused that spike, no idea. But it's also the monthly pivot. So there's a lot to like about this level for mine. And if we can get to there, I will be looking for shorts again. If I trade it to there, it would be at small risk because, as I say, my bias, momentum, everything's pointing me to the downside. But I'm certainly not giving that away. There is a nice trade in here if it sets up. And after all, we've got bullish engulfing bar sitting here, big hammer sitting there, and potentially a higher low. So the recipe is very enticing and certainly there. And I certainly can trade this in either way. Guys, I'm just going to pause for 2 seconds because I have to answer a text message. I'll be back to you in 30 seconds from now. Okay, back to where I was. We've got, the possibility here is good. We're now in the UK session, by the way, so I better have a look at some 30-minute candles. Not that I trade the first candle of the UK session, but it does give us an indication as to what may or may not be going on in the minds of the traders. And that's, of course, exactly what we need to do. First thing I see here is there may be a few bulls around. They're not exactly driving the market crazy at the moment, but they're there. That's pound that we're talking about. Bring it on, I say. Let them take out the high here and then retest the confluence. And I'll look to join them. The Aussie, not dissimilar in first candle. It's looking very much the same. Impossible for me to trade the Aussie long at the moment, as I said before. I need to get to this area here before I consider it. Yeah, if it got up to the weekly pivot, that would be fine. I could look at a short, but at the moment I'm not looking anywhere. Wow, big bar on the euro. It looks as though the bulls have made a little bit of a statement there. We're nowhere near our entry on our trade, of course, but that could change. It's interesting, though, the candle, because if, as a result of this, and if it were to close here, and pull back to this confluence area, as I said, it may be a very good sign for the bulls. And on the 30-minute chart, which is what we're looking at currently, I think I'd be happy if that were the case. We'd be taking profit before the entry on our 4-hour trade, of course. What I don't want to happen is I don't want price now to come and take our 4-hour trade in, because the very first thing that I would expect after this candle closes, if it is a big bull bar, are sellers to come into the market. And that would take us straight into an unenviable situation. Okay, that's the euro. EuroCAD we're not really that interested in, but we'll take a look at it. The only reason I wanted to have a look at EuroCAD earlier was to show you that that trade that we cancelled, or that expired, more accurately. That's a bit of a mess, this one. Although that said, new lows here. If I got a daily pivot test and a lower high, so a rejection bar, if you like, in this area, maybe even we can find a confluence with this one as well. Sure, we can. So there it is. That's a very interesting area for me now. If that were to break, consolidate a little bit, then back underneath here, or just give me a reversal bar there somewhere, that would be an interesting place to place a short, or position to place a short. Big rejection of the weekly pivot after having broken it as support, finding resistance, coming off it, lower high, does get me interested. So we'll look at that one. That's my dog, of course. Give me 2 seconds. Okay, sorry about that. My wife just got home, in case anybody was wondering. I'm sure you weren't. The dog goes nuts, as he should. That's his job. Righto, we've got EuroCAD and yes, another confluence area. So you can see a pattern emerging here. And the pattern is that these confluence areas are going to be where I want to trade, and probably not before. A couple of other crosses that I do want to have a look at. One of them is dollar yen. Dollar yen gave a sterling performance as an indicator yesterday, as it came down to test the weekly pivot and rejected it very, very dramatically with this fairly strong low test bar. Is this a sign that dollar yen is ready to go long again and continue this, what really appeared to be a, certainly when this bar was forming, appeared to be a return, if you like, to the bearish mode, because we come back to this level here, of course, which you can see. Potential right shoulder even area. It may be a little bit early for that if you like heads and shoulders. In fact, it's probably a lot earlier for that to happen. But that is a fairly strong sign that the previous trend is about to continue. I'd be willing to play that, but I don't want to trade into this area. I don't want to trade into the high for clear and obvious reasons. So what I'd like to see happen here is price come and bounce off something again on the smaller time frames. Let me have a look and see what that looks like on the 4-hour time frame, for instance. Well, I suppose once again we've had the higher low here. Just let me extend this range a little bit. In fact, that doesn't look very nice anymore. Let's get rid of that. Don't like it. What have we got? We've got an area here that interests me. Well, it used to interest me. It doesn't anymore. Probably got a little area here that interests me as well. Ash did have an order, by the way. I'll give it to you in a sec, guys. Yeah. Looking a bit head and shoulderish, but yeah, it's a bit out of context. I'll give you that order from Ash, guys. He's looking at Kiwi yen. Kiwi yen. I wouldn't have a Kiwi yen chart, I don't think. Let me find one. Kiwi yen. There we go. Chart window. Get rid of that. Give myself a template. Now he would be probably on a 15-minute time frame, would be my guess. he was looking to go long at 73.85. Where's 73.85 to start with? Round about there. Okay, so he's probably playing this bar here and waiting for an entry above it. So he's long above or at 73.85. His stop is at 73.69, which is just about bang on the daily pivot. Just under it, in fact. Good place. And his first take profit is at 74.25, which is around about there. Back, it's bang on there. So good reward to the risk here, without question. Risk is about 16 pips. Reward on your first take profit is about 2.5 to 1 on that. So that should be a decent trade if it does kick in and, of course, go to target. So New Zealand yen, again, this is from Ash. He's trading long at 73.85. His stop loss is at 73.69, and his first take profit is at 74.25. Okay, that is Ash's trade at the moment. Where did we find ourselves? Dollar yen. We were still looking at that. I'm looking here at an interesting scenario, which is why I'm pausing, because I'm just soaking it all in, to be fair. I said I'd like to see another test of this daily pivot. Certainly that's on the cards, but I'm also liking this here, where we've broken the monthly pivot, come back underneath it. I think if price is willing to go back there again, it will probably overtake this. The issue I have, 9.5. I think there's plenty of room for profit there as well. Okay. Right, I'm actually going to place that order. Let's do that. New order. Dollar yen, 30-minute charts. We've got 0.5 of a lot we'll do on this. It'll be a buy stop. So pending order, buy stop. And we're going long at 112.65. 112.65. Why don't I just type it in? It's going to save a heck of a lot of time, isn't it? 12.65. The stop loss is going to be 112.54. $112.54, and take profit, we'll leave empty. Okay, so we'll place that. Okie doke. Can't see that on my chart for some reason, but the entry is here, and the stop loss is just here. So we'll see how that goes. I'm a little bit early with it, I must say. Well, I'm one of two things. I'm either late or early. Late because I've only just seen that scenario. It's something I do like to see. It's a new high. It's taken out this level here, and it's taken out the monthly pivot. So the theory that I'm using here is that, again, if price is willing to go back above this monthly pivot, having rejected it, then I think it's also going to try and take out these highs. So that's what my thought process is on dollar yen. That's on the 30-minute chart. Okay, what else have we got? Euro yen. Yeah, probably looking for a higher low here. Don't really have it. I've got price coming to an area and staying there without giving me a bit of a pullback. That's what I want to see. I want to see a pullback down here, then a higher low, and get interested in that a little bit later. Is that going to be possible on the 30-minute chart is the question. Where we have not really a definitive bullish engulfing bar there, then we came back, put in a reversal bar on the daily pivot. That may or may not be the entry that we need. I don't like it so much because I like to see a decent retracement. There's really no retracement here. It's just gone into consolidation and then put in what arguably is certainly a low compared to this one, but is it a swing? I don't know yet. Really don't know. I'd like to see another one. And if I were to see another one, then I might get interested in trading it long, but not before. Pound yen, of course, is interesting given the circumstances surrounding the pound that we've been trading and we entered last Thursday short. This has put in a bit of a hammer after this sell on the daily charts that we've been witnessing. We also witnessed a similar scenario to what I've just described on dollar yen, which was breaking the monthly pivot, coming back across the monthly pivot. And again, I say, if price is willing to come back there again, I think it'll take on the highs. Similar scenario here on pound yen. As you can see, we've broken the monthly pivot. We've gone back across it. The only difference is that this has got a bit of a tail on it. If I go a bit tighter, you can see it. And this has already, we're too late for this one, of course. The entry would have been below that bar and trading short. The one thing I don't like about this is that level right there, where we've had a big swing. We've had another little swing, I don't say a big swing, and we've come off that as a rejection with that big hammer bar. So to me, it's nowhere near as clear cut as is dollar yen going in the opposite direction. So I'm going to stay out of this one. Yes, I see the tops, most definitely. Do I see a definitive lower high at this point? I think the answer to that is no. Again, what I like to see is a retracement, then a lower high. Don't think I'm getting that. You could probably call that one. And I know I'm on a daily chart. I think I want to see a rally first before I continue this short bias that I have. And I certainly don't want to trade into that level. So no longs, no short here at the moment. With the long scenario, I've got to find something for this to bounce off. We have a look at the 4-hour chart. Beautiful double bottom, tweezer bottom if you like. Yeah, I think this is not the candle for me, of course, but if I were to see, what do I want to see here? I don't want to see that continue, is what I want to see. I think I need price to come down maybe even to this level here, but not in one bar. I need it to go slower than this. One bar is way, way too dangerous to trade against. So I need this to slow down, and I need price to find its way down to maybe just here, around about this level. Then give me a swing. Give me a rejection bar, something like this. Then I start to get interested, but not before. The 30-minute chart may accommodate us, however. And that appears to be far, far better for me. Got a rising star here, or a morning star here. And we're looking for, now that we're getting that nice pullback, that's what I like to see. If we were now given a rejection bar here, it then gets far more interesting. So I'll be looking for this area to turn around. And if I am willing to trade long, that is, don't forget we've got a very, very bearish scenario taking place. If we have a look at the daily chart, it's getting really, really bearish, given what I've just described on the monthly pivot. But again, we've got that scenario on the daily chart where we want to see a bit of a rally, maybe back to the monthly pivot. So it's not clear cut here, and tough to be trading short, certainly on the daily chart. And therefore, we'll follow that pursuit that we have with interest. Pound yen potentially long. Okay, we've got about 9 minutes before the close of this bar. We'll have a look at a couple more crosses. This one here was interesting with this bar. Something that similar to what I was saying on Dolly Yen. I like to see a break of something and then a retest of it. That's telling me this wants to go long. Trading that. Too late now, because if I was going to trade it, would have traded this bar here. But I don't really like that bar, nor do I like the fact that, again, we're trading straight into these lows here. It's really tough to be doing that. So, yeah, just not interested at the moment in trading Aussie Kiwi. I'm interested in Aussie Kiwi when it goes into range, and it's really not into range at the moment. Not giving me that. Very interesting gap here yesterday, wasn't there? And it closed it instantly. Have a look at that on the hourly chart. Yeah, it gapped all the way down to here and closed pretty much at the close of the gap. And of course, gone on since there. Well, so far gone on since there. This looks interesting, actually. Far more interesting on the hourly chart than it does on the 30. Untested daily pivots. Tough to go long here. The 4 hour look like. That's the one we're looking at. Yeah, tough to go long. Really tough to go long. But I think that's where I'd like to be. But no, not yet. I want to see price come back to here and retrace. No thanks, not Aussie Kiwi. How about Aussie Yen? Aussie Yen, we've hit the weekly pivot. We've bounced off the weekly pivot. I don't see anything there that excites me. I have to be honest. And again, we've got an untested daily pivot, so it's not for me. All right, how's Ash going with his trade? Not triggered yet. Pretty sure mine's not triggered yet. Well, there you go. There's a big reversal in that one candle. And that's exactly what I said before. I didn't want to be taken in on that big move if we were to go in long here, because that was what can happen. And that's why I don't like to trade the first candle of UK session, because oftentimes it will just go one direction and come in the opposite direction. And what happens next is anybody's guess, because it's now likely to probably close as a doji, unless, of course, this takes off and goes further south. But it does take away the impetus, if you like. If I look at the 4 hour chart again, hasn't really taken ours away or this away from us yet. We've still got a higher low, so that's okay. But if I was looking at the 30-minute chart, we actually don't have a higher low anymore. We've taken that out. It's not to say it can't turn around, but it's starting to look less appealing, I'll put it that way, to me as a long than it did, let's say, an hour or so ago. So that's where we're at. We've got about 5 minutes left before the candles close, guys, and I won't be doing anything until that point. So what I'm going to do is just hang in silence there for a bit, and I'll be back with you when the candles are new. Okay, guys, there's our new candle. Oh, my goodness. This news, this low-level news is certainly giving the market a bit of a shake-up. Let's see what's going on. Okay, the first number or numbers were French manufacturing numbers. Now we're into German manufacturing numbers. And it would appear on the release of those German manufacturing numbers that the market just went a little bit pear-shaped. Well, when I say pear-shaped, it certainly moved. That was Euro CAD I was looking at. Have a look at the euro; it's exactly the same. So I think it's now time to consider our positions. Pound's gone with it. Aussie's slowly going with it. I like that. I think the Aussie's stronger than the other two at the moment. Certainly, it would appear that way. So we've gapped down. Like this, unless something else is happening, then these manufacturing numbers must be ridiculous because they wouldn't normally move the market. So Euro yen, that's moving as well. There's something else going on, guys. It's not that news. Something else going on. Yen pairs. Yen pair. Yeah. Yeah, I reckon there's something going on, but I don't know what it is, and I'm not across any news service at the moment. Shane Ash is not here; he's all over that sort of stuff. Let me take a quick squiz back at the Forex Factory and see if we've got updated figures here. But I don't think this is it. I really don't. I mean, those numbers earlier haven't missed by much, and that was it looked like a news reaction because it happened on the bottom of the hour, but yeah, I don't know. Time will tell, of course, but unless these numbers are ridiculous, you wouldn't think you'd get such a big reaction. Well, there are the numbers. They missed, obviously, both low, but, you know, it's not that dramatic, and it is orange news, so beats the heck out of me right now why the market is reacting as it is. But then that's wouldn't be the first time that's happened, and it won't be the last. Let's see if we can do anything about it. Well, too far gone, Euro CAD. I can't trade that. Euro dollar. I'm actually going to cancel the order now. This is too much to fight against, and the market's making a clear statement. So we'll cancel the Euro US dollar 4-hour trade, and I'll just have to put that out as a call as well, guys. So just bear with me for a second whilst I do that. Okay, that's gone out, so that's all good. What are we looking at? 30-minute charts is what we need to be looking at. Euro CAD gone, Euro dollar gone, Aussie dollar. Interesting, isn't it? Aussie hasn't gone with the euro. Pound's gone as well, and the Aussie hasn't gone with it. That if you're trading something like pound Aussie, for instance, you'd be on pretty good terms if you're in the short position. And that appears to be continuing. But that said, we're at a support level. So it's hard to get confidence here at the moment, I've got to say. That's pound US dollar. Dollar yen is holding its own. That's a bullish sign too. Everything's coming back. Seems the reaction was a little bit knee-jerky. Yeah, I'm not in love with this market, I've got to say, at the moment. How did Ash go? He's still nowhere near triggering. Bouncing off the pivots maybe the go. I don't know if he would cancel that or not. But at the moment, he's still got an order above this candle, and the entry is at 70. Let me just read it back again. Entry is long at 73.85 with a stop loss at 73.69 with a first take profit of 74.25. So long at 73.85, stop at 73.69, TP1 at 74.25. I've cancelled my order, the euro dollar long. Euro dollar yen, we had that order long too. Where's that gone? We're not long till above here, so there's no risk of getting taken in anytime soon. I just can't see it on my chart. That's concerning a little bit. I'm going to hang in here. I'm not going to change anything. I'll keep that order above this candle and the stop below it. The entry level once again was at 112.65 and the stop loss was 112.54. And I haven't even considered taking any profit yet. I'll wait and see what price does, and if it happens to spike, I'll put in a little guide there and see what happens at that level. That may be an optional profit area for us. A little bit short, I must admit, but it's also pertinent, so we'll keep that in mind. Let's move on to euro yen. That's untradeable also. We've got to wait for this market to settle down, guys. There's just no way for me to trade this, except I do like that bar. That looks good. And with 23 minutes to go, if that were to close like that, it could be interesting. Aussie Kiwi are still looking for that to go short. Don't know that it's going to, though. Just don't know that it's going to. It's an untested daily pivot, and that restricts me from going long. But I can't trade it short either at the moment, so there's nothing there for me. Aussie yen falling, but resisting that temptation to go further at the moment. But certainly no trade here for me, not at that level. And that's really all I'm interested in today. So I'm very, very unlikely to take a trade in the next, certainly not at these candles, but we'll see at the top of the hour how we go. So I'm going to go to the quote of the day and read you my quote of the day. Not my quote, but this guy, Mr. Paul Tudor Jones, and we'll talk a bit about him in a sec. But his quote today is, "That cotton trade was almost the deal breaker for me. It was at that point that I said, Mr. Stupid, why risk everything on one trade? Why not make your life a pursuit of happiness rather than pain?" Now, I've got no idea what the cotton trade was, to be fair, but the message here is pretty damn clear, isn't it? You don't put all your eggs in one basket, and that goes for any form of investment that you can even consider, or anything at all. You know, you shouldn't put your eggs in one basket, or all your eggs in one basket, and that's what he's alluding to here, because it looks like he may have done a fairly bad trade on cotton at some stage. I think when I was reading his bio, he was actually the governor or something of the Cotton Institute or something like that. So he probably knows what he's talking about. I don't know if he was the in control of the cotton industry at the time. In America, this is, of course. But he's obviously had a very bad experience with the cotton trade at some stage. But that said, he clearly recovered, because if you look at this chappie, as we will, on Wiki, I mean, I don't say that Wiki is the best form of education you can possibly undertake, but it's handy, so that's why I'm looking at it. Now let's talk about, why can't I see him? He's gone. I had him up there earlier. Maybe if I go back, he'll be there. There he is. Paul Tudor Jones II, in fact. He's a couple of years older than I am. And of course, like most of these dudes, he's a hedge fund trader. His net worth's around about 4.7 billion at this time, and he founded the Robin Hood Foundation, which of course focuses on poverty reduction. In his career, this is kind of what he's done. The asset management firm, the Tudor Investment Corporation, is also one that he founded. This is interesting. One of Jones' earliest and major successes was predicting Black Monday in 1987. 1987, of course, was a major stock market crash, as I'm sure we all know. And I'd like to know what this guy's talking about right now. He puts out lots and lots of stuff. He's a philanthropist, so he gives a lot of it away, and he's in print often. I think he does broadcasts as well. So if you want to have a listen to or look at his life, Mr. Paul Tudor Jones, he's certainly somebody that has credibility, as I say, and he will be a very interesting guy if you were to know what he's currently thinking, given that he predicted the 1987 stock market crash, exactly what he's thinking at the moment. So I'm sure that's available somewhere. If you want to Google Paul Tudor Jones, then he might be the guy that is, I don't know if he's predicting it at the moment or what he's got to say about it, but I'm interested in it. So I'll take a look at Mr. Paul Tudor Jones, who reckons you should never put all your eggs in one basket. So that is the quote of the day. Okay, we've got everything going in one direction here at the moment, not least, of course, which is Euro and all of its of its crosses. The Aussie's now starting to go with them. Pound has already gone. Dollar yen is rallying a little bit. So I guess if we're seeing all of the euro, Aussie, and pound decline, you'd be thinking the dollar is in the opposite direction, and I think we're seeing that. Euro yen, that's predictable as well, going short. Pound yen. Yeah, look, this is what we're looking for, isn't it? As I said before, I want to see a retracement and a higher low. In 17 minutes' time, this candle's getting to a point where I'm not liking it. It's getting too big because it means I've got to trade back into the daily pivot with less than what I would like for reward. If you're going to trade counter trend, not that this is definitive trend, because we're really, I guess, in a bit of a range. But remember, we were talking about this bar before and how we would like to see price rally into this area, then look for the short. Well, nothing's changed there. In fact, there may even be a better price to be had there. But if you're going to trade a big candle into an area that is counter momentum, certainly, I don't think that's a great idea, because your reward at high risk is not what you'd like it to be. If you're going to trade high risk, you want high reward. And I don't see high reward available here in the first instance. If the daily pivot didn't exist, then I'm happier. I'm far happier. But it does, and it's a resistance area, so it's going to restrict the reward, or any reward that you can take out of this inverted commas safely. And by safely, I mean before resistance or support, obviously, if you're going in the opposite direction. So that's why I'm of a mind here. If this was a small candle, I'd be happy to trade it. But because it's now, what did I say, 21 pips or something when I measured it, by the time you get into the market, you've got to add the spreads. So your risk is going to be 23 pips on this trade, and your reward to first resistance is less than half that at 10 pips. So to me, it's a poor trade. It's not something that I ignore, because it's definitely there, but it's something that I don't want to trade because of the very poor reward to risk ratio that you've got on offer here. Of course, if it goes to here, then that reward to risk is perfect. But at this level, I think the daily pivot is the area that I see as immediate resistance, and I have no intention of trading that long at that point. Maybe we get another chance down the track, but no, not for me, thanks. Okay. So there's really not a lot to do, to be fair. Not a lot at all. I'll just continue to watch these, but there's no way I'm going to trade that now. None at all. It's gone. So I can get rid of that. Same could be said of Euro CAD. There's no way I want to trade that. I can eliminate a lot here. Now the Aussie, you remember I said earlier, if we get below this area here, price comes below this area here, and then retest the confluence, I may be happy to trade to the daily pivot. So what needs to happen here, and going back to reward to risk, is I need to see the close maybe in this vicinity, somewhere here, but then I need to see a smallish bar come back and retest this 70.91 level, and of course the trend line at the same time. If this candle were to stop exactly here and give me that candle, then I've got a reasonable reward to risk, again, to the daily pivot, or probably just as important, to the low of the day here, because that's going to provide potential support as well. So really, if I'm looking to trade this short, I don't need this candle to go any further. I need this to stay where it is, then get a bull bar back to here, then I can trade short underneath that bull bar. Target obvious, daily pivot. If you wanted to trade through the daily pivot, say you had you probably want something a bit more than 5 pips or 6 pips. So let's assume that we're going to go and test this trend line here, okay? So that's going to give us a candle down here, entry about there. It's going to give us a candle of about 7 pips. That's not huge, but it's one I'd be willing to take into a probably 8 and a bit pip potential profit before support. Or is it? It's only a 4.5 to there. Yeah, see, it's just not great. Taking too much risk for very little reward. It's a sticky situation. One I'm not completely happy with. I think dollar yen is our go, guys. Where we've got this order above here. I think that's our go. I'm just going to stick with that. Euro yen, no, too far gone. Pound yen, no, too far gone. Aussie Kiwi, I don't want to trade long. I want to trade short, and I have got nowhere to trade short from at the moment. Although I guess this is a bit more interesting. The equal high here is interesting as well. If that, of course, remains an equal high, it may not. How's Ash going? Still nothing. No entry for him. I don't know at what stage he closes his orders, but I guess the entry's still there, so leave that one. I'm running out of things to look at, guys, to be absolutely frank. Yeah, there goes the CAD. Remember we spoke about the CAD and the potential to trade this, and the Euro CAD long, remember? We were talking about that. It just went too fast. What a shame. What a shame. Anyway, that's the way the Vicky breaks. Guys, I'm actually going to call it quits because I've run out of things to talk about, to be fair. And to be perfectly frank, there's very little to do. I'm going to stick with dollar yen. And if we get taken into this, I'll take profit reasonably quickly because I think the market is a little bit jittery and I'm not sure why. So if we get taken into this trade, I'm just going to see where that line is. If we get a spike there, I'll probably just take profit and move my stops underneath the monthly pivot, which is not too far because we've only got stops about 4 pips under there anyway. So that's probably what I'll do. I'll take profit early and move my stops underneath the monthly pivot. Then if we get through that line, we're home and hosed. No problem. Obvious target would be there. So you could scale out there or you could close there, either one, if you so chose. 3 pips is not much to take, but we've only got a 10 pip risk, so I'd be willing to take that 3 pips if the market gets to there and stops. And you see when the price is moving, that actually does get there and it'll stop. If it does stop, I'll take profit. If it goes through it, then I'll wait till it does stop and then take profit above it. So you see how it stopped there now. That's what it does. If it goes, it spikes like that and stops. Take profit there. That's what I mean. So if it gets to that line and stops, I'll take profit, move my stops under here. If it gets above that line, I'll wait till it stops, then take profit. Okay. So that's what I'm going to leave you with, guys. It's a little bit early, I know, but really at the end of the day, there's no point in me repeating myself over and over again. And the market has pretty much made a statement at this point. We will leave it at that, come back with you tomorrow when we'll do it all again, hopefully with Ash back on board. But he's obviously having severe internet problems where he currently is in Singapore. Thank you for your company. We'll look forward to it again tomorrow. Have a good one. Bye-bye for now.